Good afternoon, everyone, and welcome to today's virtual non-deal roadshow. My name is Hala Shergi, virtual event moderator here at Renmark Financial Communications. On behalf of our team, we want to thank you for joining us for the presentation of Generation Mining Limited. Generation Mining Limited is currently trading on the Toronto Stock Exchange under ticker symbol GENM and on the OTCQB under ticker symbol GENMF. Presenting today is Executive Chairman and Director Kerry Knoll. And with that, Kerry, I will hand over the floor to you.
Thank you. So Generation Mining is a company that's been around. It's in its third year of existence, and it's been just over 2 years since we got our key flag project, which is the Marathon Palladium project in northwestern Ontario. It's a multi-element deposit, mainly palladium, then copper, then platinum, but it's also got some gold and silver. So it's got 5 payable metals. And the 3 key metals are all metals that are needed to keep our air clean. Palladium is not the metal of the future, really. It's the metal of now. It's been used for many years in catalytic converters in cars, and it's in short supply. So it's going to be needed for the foreseeable future, until such time as the world transitions to other forms of transportation. But I think that that's going to take a lot longer than most people, or that a lot of people are predicting. We've also got 1 billion pounds of copper. This was originally actually looked at as a copper mine back in the day. It's got good copper grade, similar to many operating mines in the world that only have copper, and copper is only a byproduct on this one. And then we've also got a decent amount of platinum, and as I mentioned, gold and silver. So all of these metals, copper is certainly going to be really necessary for electric cars, and platinum, of course, is a necessary element for hydrogen fuel cells. And even if cars don't transition very quickly to hydrogen fuel cells, which I don't believe they will, they're talking about buses and generators and other forms of what are currently internal combustion engines or diesel engines switching over to hydrogen fuel cells over time. But I think that's a long-term transition personally. So we did a feasibility study earlier this year in March, and it was done by the very, very top engineering firms in Canada, G Mining and Ausenco. They're the two of the biggest names, probably of the biggest 4 names in mining. On just our main deposit, we have 3 deposits, but on the main deposit, it showed a 13-year mine life and producing an average of 245,000 ounces of palladium equivalent a year. And that equates, if you wanted to do a gold equivalent, to about 300,000 ounces a year. So it's a very good sized mine. Upfront CapEx, 665 million Canadian, that's about 520 million US. Very doable for a company our size, and all-in sustaining costs just over 800 bucks an ounce. And we did a long-term consensus view of the palladium price, and that was back in March. That was $1,725 palladium. It's currently about $2,500 an ounce. And we also use $3.20 copper, and again, that's on $1 higher right now. But even at those lower numbers, it showed an internal rate of return of 30% and a net present value in call it US dollars of about 800 million. And that's against a market cap in US dollars of less than $100 million currently. Spot prices, which are still a little bit lower than today. This was spot prices in March. It showed an internal rate of return of 47%. And these 30%, 47%, that puts that in the top quartile of IRRs. The typical mining internal rate of return is around 15%, and some of them are even below that. And it showed a net present value of Canadian dollars 2 billion. That's about $1.6 billion US. And it shows a payback in the base case of 2.3 years. And at spot prices of 1.5 years. And typically mines have a 3 to 4 year payback. The only other palladium mine in the world is at the feasibility stage, which is in South Africa, has a 7-year payback. So this is pretty special. Who we are, Jamie and I are the founders of this company. We've been working together for about 8 years. We had a previous company in the zinc business called Pine Point Mining, and Pine Point was sold to a company called Osisko Metals, one of the Osisko group, in 2018, and this company was actually a spin-out from that. Previous to working with Jamie, I founded 5 other mining companies over a 30-some year period, and over that time, of those 5 mining companies, 4 of them went into production. Starting those companies from scratch, so acquiring the property, doing feasibility studies, raising the money, building the mine, and then selling the company. That's been my go-to way of doing things. And the fifth one of those five didn't get into production, but we sold it at the feasibility stage. Drew Anwell, our Chief Operating Officer, he was the quarterback of the feasibility study. He joined us about a year and a half ago. He was one of the key builders of the Detour Gold Mine, and he was at that company for 8 years previous to joining us. And then Brian Jennings, a chartered accountant, has been involved in some of the largest restructurings in Canadian accounting history, and has also been working in the mining industry now for about 10 years. And I won't get into all the rest of the people. We have a good crew, and we're building. I made an announcement this morning. We hired the former head of concentrate marketing for Glencore, the big international trading company, and we're continuing to build out our team, getting ready for production, because as you may know if you follow us, that Sibanye, our partner in this project, elected in July not to build this project, and I can get into that a little bit later in the presentation. As far as directors go, we have a majority of independent directors, so we have the good governance. We also are very proud, or I'm very proud, that we built these directors around wanting to cover the skill sets that we need advice on. And of course, at this stage of development, directors are really, really important to giving advice to a company. So we have Steve Riefert, who's a world-renowned geophysicist, Jennifer Wagner, who is a senior vice president of Kirkland Lake Gold. She's a lawyer. Phil Walford is a reserve geologist. Cashel Meagher is an engineer who is chief operating officer of Hudbay, a copper zinc company. And Paul Murphy, who's a chartered accountant who used to run the mining group for the entire Western Hemisphere for PricewaterhouseCoopers. And he's currently chairman of Alamos Gold as well as a few other companies. So we got a very, very well-rounded board. Steve Haggerty at the bottom is a consultant for us. He's also an engineer who was for many years a vice president of operational support for Barrick, and he was also their chief metallurgist before that. And he has been in charge of our metallurgy. So location, really key to mining these days. You got to be in a good jurisdiction. So we're in northern Ontario, northwestern Ontario, and in northern Ontario, you have forestry and mining, and that's pretty much it. So we have strong community support. We have the First Nations, the local Bigtagon Nishnabeg First Nation, as you can see right next to the town of Marathon. They have signed a letter of intent with us. They are in favor of the mine. And the other First Nations in the area we're also in discussions with. All of them appear to be wanting this mine to go ahead. They know there's going to be jobs. They know there's going to be other financial benefits. It's probably the busiest mining area in Canada right now, or if not one of the world. In this area, there's 3 mines under construction. Another mine got finished about a year and a half ago, and there's about 3 or 4 other mines that are on the drawing board just inside this area. And we're right down the highway from that big Barrick Hemlo gold mine. The town of Marathon exists on Hemlo, and of course Hemlo is starting to run out of gold. So the town is really looking forward to us being the replacement to that. A little closer in, and something that's going to save us a couple of $100 million in construction, is all the infrastructure that we have. We are right on the Trans-Canada Highway. There's an airport literally on our property. There's a CPR main rail line comes through. There's, of course, the town of Marathon, so people can live in town. They don't have to do the 2-week in, 2-week out thing that a lot of Canadian mines face. And lastly, this power line that comes through the bottom of our property is a new power line that's just being finished. It started last year. It's a major power line to connect the east and western grids of Ontario. And by coming through our property, it gives us access to not only cheap power, probably 6 cents a kilowatt hour, but also green power. And more in mining, your carbon footprint is a key metric for a lot of funds as to whether or not they invest. And the fact that we can get our power off of a grid that's essentially 100% carbon free is a real bonus. And 10 years ago, if you built this mine, you would have had to put in diesel generators to generate your own power, and there just wasn't enough local power available. There's a mine 100 or 60 kilometers north of us called Hard Rock, and they have to put in generators with natural gas. They don't have access to power. So that's a real bonus for us in terms of the investing public going forward. So the ownership of this project, it was owned by a company called Sibanye-Stillwater, a South African company. They're a $15 billion company. This was a little small for them. They did have the right to back in up until last July, but they elected not to do that. And as they told us that they really want to focus on battery metals, which we don't, even though our metals are green, they're not really battery metals. So they do want to focus on things like recycling. Battery metals, they also indicated that this was probably a little small for them. Also, in the history of Sibanye-Stillwater, they've never built a mine before. They've only acquired mines, so it's not something that they don't operate in Canada. They don't know the permitting. They don't know just the lay of the land. So they elected not to do it. They are a significant shareholder, and they still own a part of the project. We are talking to them about a way to deal with that. And that's about all I can say at this point, but we're hoping something happens in the next little while. So here's a kind of a snapshot of the feasibility study, and I'll draw your attention to the bottom right-hand column there, distribution of revenue. So as you can see, it's mainly a palladium mine. 58% of our revenue, another 27% comes from copper, then it goes platinum, then gold and silver. And what's really nice about today's market for raising money and having a multi-element mine is that we can stream the lesser metals as part of our CapEx. We've had proposals on the table in excess of $200 million for streaming just a small portion of those metals towards the bottom of that chart. And that's how we intend to raise a lot of the equity that we're going to need. We think that we can do 2/3 of this mine on debt and a third on equity, and we can get most of the equity through streaming. So it's going to be, we expect this to result in very, very little dilution. It will cut into future profits a little bit, but when you look at the numbers here, this is an extremely profitable mine. As I said, a 1.5 year payback at spot prices is pretty exceptional. And at spot prices, again, there's the cash flow over the life of the mine. It's $5.3 billion undiscounted. That's Canadian dollars, but still that's a big number. So we can afford to give away a little bit of the cash flow now in return for not having to dilute shareholders very much going forward. And here's the cash flow by year. As you can see, 2025, 26, the numbers are huge. Over the first 3 years, it's almost $1 billion. So that's pretty exceptional for a mine that costs $500 million to build. Another thing is we've designed the mine to get the palladium out in the first half of the mine life. We're getting 2/3 of the palladium out. And the reason for that is because we expect by the year 2030, electric cars will start having a much bigger impact on the palladium price. We expect that price to start declining. We expect it to be replaced in a big way by copper, so that we've kind of reserved a lot of our copper for the second half of the mine life. We have 2 great years of copper initially, but then most of the rest of it is reserved for the latter years. So we're gonna transition this from a first half of its life as a palladium mine into a copper mine, and then we've got these other 3 metals: the platinum, the gold, and the silver, some of which are available for streaming. And that we won't stream all of these, but we'll stream some of them, and that'll go a long way to reducing our equity portion. So the sensitivities, I love these numbers on this. If you take today's palladium price, if you go along that top row there, the top column, and look at the different prices, right now we're around $2,500 an ounce. That adds $800 million to the base case net present value. But what's really interesting is if you cut today's palladium price in half, down to $1,250, we still have a 20% internal rate of return, which is exceptional. I challenge anyone to show me a gold project where you could cut the gold price in half and still have a 20% internal rate of return. You probably wouldn't even have a mine if you cut most gold prices in half. Same with copper. If you look at the recent copper price it's about $4.25 now, but it was recently at $4.50. That as a byproduct, and it added $300 million to the net present value. And that's 3 times our market cap. So you've got, and at $4.50 copper, another thing is copper pays all of the expenses, all of the operating costs. So all of that palladium is mined for free at $4.50 copper. So pretty exceptional. So I'm just going to talk briefly about palladium. Palladium is essentially almost all of it is now used in catalytic converters in cars. They scrub out the carbon monoxide and the nitrous oxide, and it also burns the unburned fuel. So it's called a 3-way converter. It's in deficit. The annual demand is about 11 million ounces. There's about just under 7 million ounces coming out of mines every year, and about 3.5 million comes out of recycling. So you have a bit of a deficit, hence the high prices that we have. There are no significant mines under construction or even in the planning stages, at least for the next 4, 5, 6 years. Flat Reef, Ivanhoe's mine is going to be 200,000 ounces of palladium a year. That's going to be, what, 2%, less than 2% of world consumption. And we're going to be around the same. So there's no significant new supply coming on, and yet the demand continues to rise. This is a table that shows you the deficits. The first of this millennium, the first 10 years was the market was in surplus, and that surplus stuff all got stockpiled and put in vaults. And then as it started to go into deficit, that material all came out of vaults. And about 2019 is when it passed over and got to the point where there was a true deficit. There was no more palladium left in the vaults, and that's why the price has gone up. And now, right now, it's just a matter of them recycling as much as they can, and from old catalytic converters and also old white gold jewelry, and that's kind of where they're getting the balance right now. But what is happening is China and Europe have been increasing the amount of palladium required in each automobile. The other thing that's been happening is hybrid automobiles have been getting more popular, and they use even more palladium than a regular car. So you've got a situation where consumption is going up and production is not. And so we think we're going to have a good bunch of years going forward here. This is a breakdown of the metal that we produce in all the different car types. So the lowest one is the current one, the internal combustion engine car. If you look at the electric car, it uses more. It's mostly copper. The fuel cell uses platinum and copper, and the hybrid car uses a lot of palladium and copper. So all of these different types of cars, they need our metals. And so whichever way the car industry transitions, we're going to be there for it. And I think I mentioned that we're fortunate in our location. We have very clean power, and this is important to a lot of the big funds, a lot of the very big fund groups. They want to see what our carbon footprint is. We're just in the process of letting a contract for our company to study that exactly. But the point is our electricity is almost 100% carbon free. And if you compare that with the other palladium producing locations in the world, we're not even close. We're going to be producing the greenest palladium on the planet. Those of you who follow the Canadian market, these are the largest precious metal mines in Canada, but they're mostly gold, but there's also Lac des Îles, the Impala's palladium project. We would be, if we were in production today, we would be number 7. And that's at that 245,000 ounces of palladium equivalent and 299,000 ounces of gold equivalent. So very, very significant mine in very, very good company. And yet our market cap is really lagging. A lot of people want to know why that is, and I think there's a few reasons why. I think people are skeptical because Sibanye walked away. I always thought Sibanye was going to walk away. I never ever thought they were going to build this mine. The other thing that has happened is that people look at our market cap and they say, how are you guys going to raise the money? But you know, I've raised $1.5 billion for mining deals over the years. I've done this. I know how to do it. We know how to do it. We've got the team of people. We've got the project. We've got the location. The banks are giving us offers. We're in the process. We hired Endeavor Financial, who I've worked with for the last 25 years, to organize all the different offers and to try to compare them all and put together recommendations on which proposals we take. And we are going to be doing some combination of debt and streaming, and that we expect to have that all in place, if not by the end of this year, early next year. We do need to raise $50 million in the meantime, 50 million Canadian, about 40 million US, and that is also expected to come through the sale of the stream. So we're trying to do it without letting any more equity into the market. So this is our timeline going forward then. The last couple of years, I'm proud to say that we've done every single thing that we said we were going to do. We did it in the time and on budget that we said we were going to do it, and we see that mostly going forward. Our biggest challenge right now is to get the environmental approvals. That is, fortunately or unfortunately, something that is defined in time in Canada. So we do have a pretty good idea of when that's going to happen, and we expect that to happen in June or July next year. No guarantees when it comes to government and permitting, but we think it's going to happen. The governments seem very favorably disposed towards this project. Unlike, say, coal projects in Canada, which have been getting turned down lately. This one, all three of our main metals here are on the critical minerals list. which means they are needed for Canadians to clean up their act in terms of transportation and other forms of pollution. So they really know that we need these metals in Canada. We don't want to risk having to source them from places like Russia or South Africa, where they've got issues with the electricity and water supply. So we're also about to let the contract on the detailed engineering and then arranging the mine financing. And with a little bit of luck, we're going to be starting construction about this time next summer. We're hoping that all happens. It may be a little bit delayed. The only delay that I can see happening, other than an outright market crash, would be a delay in the permitting. And we don't see that happening, but you know, when it comes to permitting, you never really know. And just a quick update on our exploration. We've been adding tons at depth for our exploration efforts the last couple of years. Those tons aren't going into the feasibility study because it's finished. We're still looking for the elusive source of this rock. It's one of the richest palladium samples ever found, 188 grams of total PGMs, 9% copper as well, 6.6% nickel, very, very rich. And we don't know where it came from. We found it on our property and we're looking for it. We think that it could be a deeper zone of sulfide mineralization that formed back 1 billion years ago when this whole deposit was formed. And we've been drilling, looking for it. That's an outline of the open pit. And there's the central feeder zone in the middle. That's where our drilling, most of it has taken place for the last 2 years. We're now currently drilling the chornolith zone to the left. And that one is, we should have some assays out on that within the next week to 10 days. And we're pretty pleased with how things are going there. And that could extend the mine to the north. And there's a sample of some of the massive sulfides we've been getting out of the chornolith zone. So just to wrap things up then, we've got about 150 million shares outstanding, a market cap. I think our share price is down a little from this, but about, this is Canadian dollars, about 138 million at 92 cents is probably 120 million today, and so that's a little under 100 million US. We've got some good shareholders, a couple of the mining billionaires, Eric Sprott and Lucas Lundin. Sibanye has been a loyal shareholder and they're a good partner to have, despite them opting not to build the mine, which we were happy about, by the way. And officers and directors, I think that's actually gone up. It's a little over 8% now. We've all been buying in the market lately with the depressed prices because we think we're going to make some money on those shares. So that wraps up the formal part of the presentation. And now we'll open up the floor to questions.
Thank you so much, Kerry, for this great presentation. And yes, we have reached the question and answer portion for today. And now for your first question, what is the exploration upside at Marathon?
Something that is kind of, I think, underrated in our company and in our project, but this blue area is the property itself, and it's about 220 square kilometers, or that's about 60, 70 square miles. It's a big piece of ground. And it's very rugged ground. There's no roads through the middle of it. There's not even any trails. It's helicopter access, and it's been as a result, it's been very, very little explored. That little white line that goes through the property, that is a road or a trail. We have been doing some exploration along it, but even along that road, there's been very, very little exploration done. And so we think there's probably other deposits. I mean, what is the chance that we found all the deposits that are on this property when hardly any of it is being looked at? The unfound ones are likely, the three deposits that are on the property, Sally, Geordie, and Marathon, were all found because they outcrop. The rock showed up at surface and you could see it and therefore drill. We're now focusing on different geophysical methods to try to find the buried deposits, the ones that are under overburden or maybe even underwater. We do expect there to be other deposits on this property. And that said, the recent exploration we've been doing is designed to add years to the mine life, and we've been hitting, just about every hole has hit ore grade mineralization, so we're pretty pleased with it. We haven't hit anything spectacular like that rock I showed you a bit before, but we are adding tons. Every drill hole has been adding tons. So and those are not permitted tons, but when the mine's getting older, 10 years from now, and if somebody's thinking of acquiring us, they're going to count those tons because they're going to look at this. The bigger companies want to see a 20-year mine life, and I think we're probably pretty close to that now. So that's the exploration upside, is extending the life of this mine. And there's always the outside chance that we're going to discover a very high-grade deposit, which could change everything.
What are the remaining key catalysts for 2021?
Obviously, one of them is exploration. Any good exploration results, I think, will help things. The key ones will be advances in permitting and environmental assessment approval and mine financing. And mine financing, I think, is the one that people really think we're going to struggle. I don't think we are. We're in discussions with some very big institutions about getting that done. And I think once people see that we can finance this and we can finance it without a lot of dilution, I think that we're going to get a big, serious re-rating. If you look at that chart that I showed before, there we are over on the right. I would expect that we would be somewhere in the middle of that chart. So that would imply about a three or four times share price from today. And I can't obviously promise that, but I think that we are going to get re-rated when you see the financing that we're going to be putting in place. And it's not going to happen overnight. This stuff takes, the due diligence, et cetera, takes several months, but we're hoping to have that all in place by the end of this year or early in the new year.
Do you have a rough estimate of how palladium is supplied to the market from recycled catalytic converters on an annual basis?
As you can see in the second last point here on this particular slide, there's about 3.4 million ounces recovered from recycling. And almost all of that is coming from catalytic converters that are being recycled. You know, in a lot of places, I think 38 of the states and I think three or four of the Canadian provinces, for example, require regular, maybe every 2 years or every 5 years, a check on your emissions from your car. And if you're putting out too much carbon monoxide or nitrous oxide, you are required to replace that catalytic converter. So those old ones all get recycled, and then you got to go out and buy a new one. So they are definitely getting recycled, and they will continue to be recycled. But when the price went up about a year and a half ago, believe me, every junkyard in every place in the world went through and dug out every catalytic converter they could find and sent them to the recyclers. So the recyclers have been busy with it. I think that the amount recycled has plateaued in my estimation. I don't think it's going to go up very much because the high price brought out all of the old catalytic converters that were sitting rusting away.
Is generation mining in any ETFs?
No, not that I'm aware of. No. I wish we were, but I don't know that there's any real palladium ETFs out there, and if they are, they would only be producers. So I think once we get to production status, then I think that might change.
Do you think it is likely that another company will acquire Generation Mining?
Well, I've started 6 mining companies in my past, and all 6 were acquired at some point. Some of them after production started, some of them before, but they were all acquired. So I think that is probably the thing that's going to happen. I can't say whether it would happen before we built the mine or afterwards. Of course, we're worth a lot more money with the mine built. But if the right offer came along in the meantime, we'd obviously have to consider it. And we're going to do the right thing by shareholders. I mean, the management are all large shareholders, so we're here, ultimately to build a mine, but also to make some money. And if someone comes along with a good offer, we take it. But we have had preliminary discussions with a few groups, but very preliminary. They all wanted to wait and see what Sibanye-Stillwater's done. So we'll see what happens going forward.
Was there a minimum sample size that you needed to send to the smelter for the copper PGM concentrate?
We had the amount of sample that we had. The smelters all request more than they need. They just do that, and we didn't have more than they needed. We had just enough. So I don't remember the exact sample size. It wasn't that particularly large, but it was certainly, according to Steve Haggerty, it was certainly sufficient for their analytical needs.
What is the next step after the smelter sample?
The next step will be, so we have 2 stages here. We need to raise some money now because we are doing things like detailed engineering. We're going to spend $20 million on detailed engineering. This is part of the capital cost of the mine, by the way. but we need to do that engineering before we can start construction. So we want to start that engineering now because it's an 8 or 9 month process. We need to raise money to start putting some down payments on equipment, on the mine fleet, and on some of the ball mills. That's about a $13 million number. So we need to raise some money now. So we're going to be raising, the future of us is raising money in 2 tranches. One of them is now, or in the next two to 3 months, and then the next one will be the production financing. We have proposals from smelters to do deals now that they will actually pay us money to guarantee the offtake goes to them. And some of that money is upfront now, and some of that money will be advanced during construction. It's our understanding from our advisors at Endeavour that it's not the best move right now to tie up the concentrate sales. So what we want to do is make sure that the smelters are in a position to decide whether they want it or not. And once they've decided if they do want it, then our next step will be to, at some point, negotiate an offtake agreement with 1 or more smelters. And that will come with some financial benefits for us, we expect, because we've got a very clean concentrate. And if that happens, then you know, that will be part of the whole mine construction financing package. We are evaluating whether we can do, instead of selling a stream, whether we could tie up the concentrate now, but the advice we're getting is not to do it. So we're engaging with a number of smelters in different parts of the world, but we don't expect to have a deal with them until such time as we announce our entire construction financing package.
Now that the Sibanye issue is resolved, how goes the work on the mine plan?
The work is going ahead full speed. We never really stopped. We never thought that Sibanye was going to back in. Obviously, some people in the market did, because our shares took quite a hit when they announced it. But it's just full speed ahead. So we're starting up the engineering. We're going to start up the equipment procurement in the fall. We are hiring people. As you saw, we hired someone we announced today from Glencore. He's one of the top concentrate marketing guys in the world, and he elected to join us. He came to us and said, I really like your project. I want to work with you guys. And we'll be adding to the team as well. And you'll see some other hires coming throughout the next several months as we build the team. And you have to have that team to get the respect of a large international bank to loan you the money to build the mine. You can't just have 1 or 2 good people. You need to have the full team. And we are putting together that team right now. So we're full speed ahead. We want to get this mine built. There's no point in waiting around. A lot of mining companies would wait until they had their environmental assessment approved. Then they would do the detailed engineering. Then they would do the mine financing, and then they would get around to building the mine. And that's why these mines often take 6, 7, 8 years to get built. I don't believe in that. I think that we're confident enough that we're not going to have to make significant changes to the plan during our environmental assessment. And once our environmental assessment is granted, then it's full speed ahead with construction. And in order to do that, we start having to put down payments on equipment now. We have to start engineering now. We have to start hiring now. So we're doing all that. We're doing it to get going sooner. We don't want to just wait around for 2026 or 27 to get into production.
Do you have a preference with which of the precious metal streamers you would like to work with?
I mean, yes and no. We want to work with the strong ones. We want to work with the ones that can give us a fast answer. And we've signed non-disclosure agreements with 6 of them, and there's more coming. So that process is ongoing. But we're going to deal with the one that does the best for us. And that's flexibility, upfront payments, so that we don't have to sell any equity right now. So we're looking to the streamers to get some money now, and then the rest of the money on construction. And there's different ones. It depends on what we want to stream. Like we've got a proposal on the copper, on part of the copper. We've got a proposal on part of the platinum, and we've got a bunch of proposals on the gold and silver. So we're evaluating them, seeing how serious they are, getting into the nitty-gritty and exactly when all this is going to happen and how long their due diligence is going to take. Some of them farm out the due diligence. They hire an outside firm. That always takes longer. Some of the bigger ones have their in-house teams to do that due diligence, and so that'll be faster. So in one respect, the larger ones are in preference because they can act quicker. And as you probably can guess, we're in a bit of a hurry. We want to get this built.
What commodity prices would a bank assume for project financing?
Well, I can't speak for a bank because every bank will have their own numbers. The number that we used in the feasibility study was a consensus of 15 banks. So, which bank we use will determine that bank. In that 15 banks that we came out with an average of 1725 for the long-term average for Palladium, some of them were as low as $1,100 and some of them were as high as $2,200. So they were all over the map. Obviously, a bank that is more bullish on Palladium will be much more interested in dealing with us. But as I pointed out before, this is a mine at lower Palladium prices. So I don't think the banks will get that scared off if their own internal numbers are lower. And sometimes the banking people take a different approach than their analysts for public consumption. Sometimes the public consumption analysts are pretty conservative. So anyways, I can't speak for each bank, but the banks we're talking to are making proposals to us. So obviously they think Palladium is got a good future.
When the $50 million is raised, how far will that cash take you?
We need about $50 million to get through to the start of construction, which is we're hoping to be next summer. We don't have a big burn rate. So most of that money is going to outside sources like engineers, equipment, lawyers, permitting companies doing the studies, answering the government's questions. So once that's all done, we don't have a big burn rate. We don't have a big burn rate inside this company. So if we're raising 50 million, we have 12 million cash in the bank right now. So that's kind of that extra 12 million is a cushion over and above that. So we think until we start construction, that 50 million will be all the money we need. And that's why we want to raise it in one lump.
Would it be feasible for you to acquire the remaining shares of Sibanye? How much would that cost?
We are under discussions with them to acquire the remaining equity interest that they have in the project. And we are in discussions with them about that. I can't really comment any further. You can do some of the math. For our point of view, it's a declining asset for them. They're getting diluted down because they're not writing checks. So their 17% will be 15% by the end of this year. It'll be 12% or 10% by the time we get to construction. So it's a declining asset for them. So the sooner they sell it, the better. Now they've had inquiries from other companies interested in it. So we do want to get it if we can get it for a reasonable amount. And so we're discussing it with Sibanye. We've had ongoing discussions with them, frequent conversations, and we're expecting to get something. And it'll be interesting because one of the nice things about it is that the Sibanye's interest comes with tax pools. They have some tax losses from their original acquisition of this project back in 2010, and we can use those. Nobody else can use them. So there's another benefit for us to acquire that. We'll pay less taxes going forward. Not a huge amount less, but certainly it'll be worth our while to do it. So that's also part of the ongoing discussion.
Thank you so much, Kerry. And I do believe that this concludes today's question and answer session. But before we go, Kerry, I will hand over the floor to you one last time for final remarks.
Thank you, and I want to thank you all for listening through to the end. Please reach out to us if you have any other questions. Also, I would encourage you, if you want to follow the company, to sign up on our website, because we have little private, not private, but targeted webinars where you can meet management, discuss things like exploration or permitting, or we have different topics every month or two, and we just send those out to our email list on our website. So if you want to continue to follow the company, it's best to sign up. Otherwise, I'm sure Renmark will keep you guys informed about what's happening. They've done a good job. I've been working with Renmark now for 23 years for my different mining companies. I was their first mining client in 1998, so we go back a long ways. Great firm. great firm to deal with. Thank you all.
Thank you, Kerry. Once again, this was Generation Mining Limited, currently trading on the Toronto Stock Exchange under ticker symbol GENM and on the OTCQB under ticker symbol GENMF. On behalf of Renmark, I want to thank you again for joining today's presentation, and we encourage you to keep an eye out for other events in your area. Until then, stay safe, be well, and we will see you all next time.